Hello everyone, I'm going to show you guys how to trade ICT's breaker block. So currently I am in a live trade. This is on my TradeAvid account over here. You can see that I am targeting this previous high over here. So I entered based on this breaker. I'm going to walk you guys through what a breaker is and why I believe that this is a valid entry. This is live time. As you can see on the right hand side, there is a countdown to close on the 5-minute candle bar. So that does show that this is live price action. Okay, and I am entering based on this breaker. Now, why is this a valid breaker? Because anyone can identify a breaker, and if you don't know how to identify a breaker, I'm going to show you what that looks like right now. In a bullish breaker, price will make a low, it'll go up, it'll make a high, then a lower low, then a higher high. So what ICT teaches is that the highest form of breakers will run two pools of liquidity. The first pool of liquidity is beneath this previous low right here. So when price runs that is the first pool liquidity once it takes out where it says low right here. The second pool liquidity will be price tapping into a higher time frame pool of liquidity, which this red line in this example represents that pool liquidity. So price makes a low, high, lower low. In the lower low, we're looking for two pools of liquidity to be ran. Then we're waiting for price to create a higher high. Now, when you have a strong bias, if you know how to trade turtle soup, it is essentially predicting the breaker before it becomes a breaker. So you'd be buying down in this lower low. We're not going to be talking about that in this video. For this specific entry model, what we're waiting for is we're waiting for price to create a higher high. And we're specifically focusing on the area where price makes the high before it makes that lower low. So in this example, I'm specifically focusing on the high before price makes the lower low. In the price leg where price makes the high, we're looking for two things. We're looking for an up close candle, or we're looking for a series of up close candles. ICT teaches that if there is a series of up close candles, you're going to mark that out in the price leg where price makes the high, and you're going to extend that out in time. That is going to be your breaker. So some people think that it has to look textbook to this photo to be a breaker, right? Some people would not be able to identify this breaker. If you cannot identify it, scale down to a lower time frame, and usually it becomes clear. In this example right over here, you can see that price creates a low right here. Look at this wick right here. Price creates the low, it wicks there, moves up. See this high, this up close candle? That's a high. Then it makes a low, then a higher high. So in this example right here, this would be my low. And if this doesn't make sense, just stay tuned in a second. I'm going to drop down into a lower time frame. It's going to look much clearer to you guys. But this is how I would identify it on the 5-minute chart. So it makes a low, high. What happens after the high? Makes a lower low, and then a higher high. If I'm strictly trading the breaker and I'm not trading turtle soup or anything fancy, I'm waiting for a close over this breaker right here. So I'm waiting for a candle close, which we do get right there. When price retraces back down into the breaker, okay, this can be a potential entry before price targets the opposing liquidity. Now on the 5-minute chart, you look at this and you think, well, I don't really think that that looks like a breaker. So now when you scale down to the 2-minute here, it does look much clearer. And the reason that is because you see the high and it looks more defined when you scale down to a lower time frame. So sometimes on the higher time frame, it doesn't always look like this, where you get the exaggerated low, high, lower low, higher high. But you can still identify it from a higher time frame, such as the 5-minute in this example. Okay, so this is exactly what we have going on right here. So this is the breaker block entry taught by ICT. In the high, we're looking for an up close candle or consecutive up close candles in here. Okay, and we're going to extend that out in time. In this example right here, notice how on the 2-minute we do have 1, 2, 3 up close candles. Okay, so technically this entire price move is the breaker. Okay, from this low to this high. So price can retest anywhere in here before potentially expanding higher. What you could do is, okay, if you believe that price is going to be really bullish, if you think it's going to be a low resistance liquidity run, which I'll talk about in another video, where it's just a fast move to the upside with little to no retraces, and it's going to expand for liquidity fast. It's not just going to be chop or a high resistance liquidity run. Okay, you can refine that price zone down to just the singular up close candle. So though this is the full range between this candle, it's low, and this candle, it's high up here. Okay, what ICT teaches is that you can refine that breaker down to the singular up close candle in here, as this is the high where the delivery starts and changes into a short-term sell program to take out short-term liquidity over here. Okay, so that's possible, right? In this example, it does dig a little bit deeper into here. Okay, we are in consolidation. We are in a consolidation profile at the moment, in my opinion. So I'm going to show you guys what validates this as a breaker in my mind. Anyone can go onto a chart and just mark out a low, high, lower low, higher high, and mark out the up close candle or series of up close candles in that high and just buy it right there. But that's not going to work, because you either need a higher time frame bias or you need to identify that price is in consolidation. You need to understand your market profile. Okay, once you understand your market profile, then you have a better understanding of which levels can be respected. So moving back to the 5-minute real quick, that is how I got this as my breaker. Okay, so since we do have a breaker at this range low, I'm looking for price to start attacking the buy side liquidity above. If we scale down to a 1-minute real quick, we do have all of these clusters of highs. I'm thinking that this is unfinished business by smart money. So it's leaving behind these relative equal highs for the purpose of attacking them later on. And that later on is right now. So in the moment, this is just leaving behind relative equal highs. This move down, okay, as soon as we get this large move down, since the bias is bullish in my opinion, what's likely to occur after this large move down is this is just inducing, it's just enticing retail traders to go short. It's stopping out anyone long that got long in here too early. Okay, and now it's running it back on those who are trapped short down in here. So these relative equal highs, this is the first draw on liquidity in my opinion. Okay, but I do think price can run up to the previous range high all the way over here. This could be a target as well. These highs are potential targets along the way. Okay, so now zooming back out to a higher time frame, we identified the breaker, but what makes this a valid breaker in my opinion? Before we do continue this video, if you guys would like to see more content from me, I have a Discord community where I share my thoughts on the market real time. So the trade that I am currently in, I did share this with Discord members beforehand. This is what the setup looked like, what I posted. I said there is a breaker. There was also SMT confirmation at the lows. I would like to see NQ start to attack the highs above, which is buy side liquidity. So most of the trades that I do take, if not all of them, are shared with Discord members beforehand. It's not a trade alert service. I'm strictly sharing my opinion on where I believe the market is drawing towards. I do post 1 to maybe sometimes a couple setups a day across the S&P 500, the NASDAQ, and the Dow. I do also have 2 video courses in here. One of them is a beginner to advanced course on how to trade ICT concepts. The other one is a time-based model where you're specifically looking between a 60-minute period during the day for one specific setup and price action. And I do show a checklist on how to trade that model, all the way from trading higher time frame bias to establishing a key level, and then all the way down to your entry model during a specific 60 minutes of the day. If you guys are interested in that, there's a 3-day free trial link, which is the first link down below. So like I said, anyone can mark out a random breaker and price action, but what gives it significance? That's the most important part. And it's going to be 2 things. Either scenario number 1, we have a higher time frame bias, that price is likely to draw into a specific level. Okay, so in this example on the top of the screen right now, let's say that this is a 1-day chart. Okay, so this is the first scenario where you do have a higher time frame bias and you're anticipating for price to draw into that higher time frame bias. So in this example, what you could do is mark out a key level where price is drawing towards, and then a key level along with order flow. What's a key level along with order flow, Dan? That could be a fair value gap. It could be a breaker block within the price leg. It could be an order block. Right, I'm waiting for price to return into a key level. All right, and then out of that key level, in line with where price is already going, on a lower time frame, it would look something like this. Okay, so this is the first scenario that I'm potentially eyeing up, where I have a higher time frame bias. I have a draw on liquidity where price is heading towards. I can mark out PD arrays along with that order flow, wait for price to retest a PD array, and then create this breaker signature in price action. This is scenario number 1. Okay, now what would be scenario number 2? All right, scenario number 2 is that price is in consolidation, and it can be in consolidation for a couple different reasons. Here's 2 of them. Either price is awaiting high impact news and time is allowing for expansion, so it's not going to expand until a specific high impact news, on the economic calendar. That could be scenario number 1. Or scenario number 2, price is at equilibrium. Okay, so we do have a lot of high impact news this week. Right here, price is just in consolidation. So it's just trading above old highs, dropping lower, trading beneath old lows, going back higher. So it's just in a range. It's in a seek and destroy condition right here. Since I have identified that price is in seek and destroy, which is, again, it's just attacking buy stops. It's going above old highs. Then it's repricing back the sell stops. Once it takes out sell stops, what is it doing? It's repricing back to buy stops. Buy stops, back to sell stops. So that's all we're doing right now. So since I have identified that we are in that specific market profile right now, which is one of the most important things in trading, once I have that, then I have a key level to refer off of, and I know which levels to target. Because if we're just in consolidation, I'm just going to be targeting range high. I'm not going to be expecting when price takes out this previous low to go all the way back down to here while we're in consolidation, or all the way up to here, right? I'm just targeting this swing low if I'm bearish, or if I'm bullish in this example, now I'm targeting this swing high up in here. Okay, so since I do have that, I have my hourly key level. All right, and then we also do have this real gap in price. This is the opening range gap over here. Okay, so price is retesting that as well. This is a key level that price has retested after going beneath this previous swing low over here. So this is my hourly pool of liquidity. When we drop down into a 5-minute time frame, right? Now we have 2 pools of liquidity where prices ran. Okay, you could say we have this pool of liquidity down in here. So you could use this 1 hour as your key pool of liquidity. You also have this previous low down in here, which is also a key pool of liquidity, right? And price has tapped that, so that's your pool of liquidity on the higher time frame, and then it's also ran this short-term low. See how it's ran 2 pools of liquidity? That is what makes this a high probability breaker, in my opinion. Okay, and then I'm identifying the breaker, I'm extending that out, and I'm waiting for price to retrade into that. Okay, if we go down into a 3-minute time frame, all right, we do have a unicorn where it does have a fair value gap overlapping the breaker. Sometimes on different time frames, the breaker could be in its different form. As you can see, if I go down to a 1 minute, right, it just looks like this singular up close candle. It's important to check multiple time frames, right? The breaker is the entire range within the high. So this last up close candle, I'm going to mark out that entire range, waiting for price to retest it. You can see that we are getting a bounce off of that currently. So that is what I did to identify the market profile and how to identify a breaker. Now we're going to go ahead and let this play out and see if price can reach into the range high. So I'm going to go ahead and pause, and I'll update you guys very soon. Okay, so I'm actually going to go ahead and close the position right here because the Dow did actually take out this previous high, and we are in consolidation. So that's enough for me. Price did take out this short-term level of buy-side liquidity. So this was about a 2-hour trade, I believe. So if we look at the entry, this was 17,859. So this still was a little over a 2-hour trade. Again, price did take out this short-term high. It's rejecting in that area. I am okay with just taking off of this high, especially because the Dow did already take out that external range high. But that is how you could trade high probability breakers in consolidations. That's going to be it for this video. If you guys enjoyed this, make sure to like, and I will catch you guys later.